Welcome to our Voices of Africa podcast, brought to you by Africa Practice, a strategic advisory firm supplying insights and advocacy solutions to corporations, investors, governments, and foundations in Africa. In a world with complex and interdependent challenges, we take the guesswork out of business engagement. We enable our clients to see more clearly in order to drive sustainable and equitable development.
And welcome to another episode of Voices in African Mining, the podcast series which explores one of the key sectors driving Africa's development. We're talking to industry leaders ahead of Mining Indaba 2026 and exploring the key themes that we'll be convening to talk about at this year's event. We've seen massive changes in the mining sector in the last year that have transformed the African sector, that are transforming trade and investments on the continent, and really starting to see the fulmination of ideas that we've been talking about for decades. We've seen critical projects come on stream like Simandou. The Lobito corridor is starting to ship its first material. And in the background of all these massive news events, there's infrastructure. We can't move material, we can't export as African nations, we can't realize our development goals without infrastructure. And we can't realize our infrastructure goals without finance. So before we can move material, before we can move people, before we can move product, we have to move money. And that's why today's conversation is so critical in our series as we explore the key themes leading up to Mining Indaba 2026. We're delighted to have one of the key players in African mining's financial infrastructure. Isabela Nyoka is a mining specialist at Ecobank, one of the continent's largest financial institutions with a footprint across 34 countries and experience supporting mining at every stage of the ecosystem. Isabela, it's great to have you with us today.
It's an honor, and thanks for having me.
It's an absolute pleasure, Isabela. One of the key things that I'm very keen to explore in today's conversation is the range of work that you've done as a mining team within Ecobank. I think there's so many different aspects that Ecobank is able to talk to, and its experiences at multiple levels across the mining sector. We know about the work you've done on some of the continent's biggest projects. I think Simandou is going to be one of the key topics for discussion at this year's event. And then we've also spoken, you and I have been exploring some of the other key jurisdictions that are so interesting as emerging destinations for mining investment. So places like Malawi aren't on everyone's radar, but it's so exciting just to learn a bit more about those places and about how finance is really starting to open them up in so many different ways. So I'm looking forward to a really kind of in-depth conversation. I think this aspect of the sector is not necessarily well understood. There's a lot of detail behind getting this right and developing the digital infrastructure that'll open up African trade and investment is one of the key things that is going to be so essential to the development of the mining sector on our continent. So I'm really looking forward to this conversation, Isabela. It's great to have you with us.
Likewise, the pleasure is all mine. I'm quite excited. I mean, you hit the very key notes that we need to hear, and we need to make sure that the markets are aware of this. So I'm glad you're raising some very interesting discussion topics there.
Thank you, Isabela. I think, we've sort of set the stage for an incredibly far-ranging conversation. So maybe the best place to start is to take a snapshot of where we are as a sector in Africa. And I think to just situate that in the massive geopolitical changes that we saw in the last year, I think trade and investments have been fundamentally transformed globally. And Africa is obviously going to have to find its place in that new world, in that new order. So interesting just to reflect on the impact of those changes in areas like critical minerals, how the impact of those changes will be felt in Africa, And then as a financier of African mining, just how you expect finance to adapt to those changes. I think that's a really interesting space to start the conversation in.
I think we've always known that there are disruptors. The economy moves in cycles, right? It's known that there are peaks, that there are troughs. So you always expect maybe at the turn of each decade for there to be something disruptive that will turn the wheels the other side and so forth. But I don't think the world anticipated as huge a disruption as what happened, the order of the magnitude of the COVID pandemic, right? Where the world came to its complete standstill. And then in the aftermath, the massive shortages that occurred because supply chains had been disrupted, and exposing how the world was heavily reliant on one jurisdiction, which is China, for the supply of everything. I think those risks were exposed, got everybody pulling back, starting to think about how do we de-risk our supply chains and how do we become more efficient. The geopolitical disruptions that then followed suit, the war in Ukraine, the instabilities around the Middle East, it just got everybody thinking, what else, what could be the alternative that would ensure that there is energy security for everybody in the world. And so the renewables became topical. The issues to do with climate change have been culminating. Some serious global hazards, in floods, fires, wildfires in Australia, in North America, the droughts, especially in Southern Africa. So I think it got everybody, it gave impetus to these issues that we had always been worried about, but had not come to a head. And post-COVID, I think globally, all the major centers of power, insofar as politics or capital is concerned, we're now thinking about how do we de-risk our supply chains, and hence the critical minerals boom. Because if we're talking clean energy, the transition to renewable energies, the transition to clean transportation systems, they all have to be backed up by increased or elevated production in critical minerals. If you take, for instance, today, a combustion engine vehicle will take anything in the order of 30 kilograms of various minerals needed to produce it. If we go to an EV, we're now talking about 10 times the number. So that means those minerals must come from somewhere. It's the same story when you talk about generation or storage or transmission of renewable energies. So the technology required either to generate, transmit, or store renewable energies is also set or designed to consume a lot more mineral components than the conventional thermal power stations. So all this that took place, the transition in technologies, the changes in our disruptive changes in our environment, politically or otherwise, got ourselves into a place, and very quickly so, where all of a sudden Africa was the center of attention because of our abundance in renewable resources for mainly hydro and solar, and then abundance of natural resources by way of the minerals that the world was looking to increase production of. So we all of a sudden found ourselves caught up in a boom. And critical minerals was a buzzword. I think we went on for 2-3 years, 2022, 23, into early 24, everybody was talking about critical minerals. I know of foundations that have been set, focused on that, and some varied legislative provisions from governments looking to enhance or to accelerate the production of critical minerals. But I think that revolution sort of went too fast, and maybe too fast ahead of ourselves, sort of put the cart before the horses, because there were certain questions that had to be, or issues that had to be addressed. Yes, we are talking about accelerating production of critical minerals so we can produce batteries and produce a clean energy powered vehicle. But how are those critical minerals being produced? So all of a sudden, the question of infrastructure became a big deal, because you are using coal-fired power stations to power the mining and the transportation of those critical minerals to port. So hence, as you rightfully say, we sort of then began to witness a shift, especially in 2025, with guys saying, let's get focused on the infrastructure issue. I think we went too fast ahead of ourselves. There were, fundamental infrastructure issues that had to be addressed.
Isabela, and that those infrastructure issues have been solved at such a massive scale in a project like Simandou. I think as an industry, we were talking about that project for more than 2 decades. There were so many people involved in that conversation, involved in different aspects of the financing, but a huge part of that transformational project and a huge part of how Guinea is going to be unrecognizable in the next few years is that infrastructure and how it's unlocked the mineral potential, not just of Simandou, but the whole country. And so, I think one of the things that you and I spoke about when we were first discussing this podcast was this idea of the ecosystem around mining projects and how finance unlocks multiple opportunities and multiple aspects of those projects across a very wide cross-section of people working in and around those mega projects. So can you talk us through that idea of the ecosystem around Simandou and how you've been involved in Guinea? Because I think it's such a good case study in terms of understanding how those projects are delivered, all the different types of finance that make them up, and how they really become realized at all those different levels. It's a fascinating case study.
Daniel, and you're referring to the Simandou 2040. They are calling it the Simandou 2040 vision, where they're looking to transform the economy of Guinea, deriving from the growth and the action that is taking place there, that Rio Tinto project. And, there's always been talk about resource, and I'm wanting to tap into what you're talking about, the ecosystem around the mega mining projects such as Simandou. The fear has always been, and for good reason, that for resource-anchored economies, they then tend to crowd out other important sectors of the economy, and hence, the term the Dutch disease. But it's exciting. That has since changed, that has since transformed. People are becoming alerted to the opportunities, especially the supply chain opportunities that exist in domestic markets, where a major infrastructure project such as what is Simandou has created, the benefits, the spin-off benefits for the entirety of the economy are unbelievable, because they've gone on to construct a railway line that is linking a part of Guinea that was otherwise inaccessible in a very remote region. They've gone on to create a new port, further down from Conakry on the southern direction. And we are talking about communities that were the back of beyond, where a road would never get there. And now all of a sudden we're going to have to see schools being built, accommodation for staffers, but there will also be resident suppliers that will then come and cluster around that project. Along the main line, you have sidings, because you're picking product from varied centers. Those sidings will need staff to mend those. They will need people to live there, and those people will need to be fed. So all of a sudden, you've got an agribusiness value chain that is coming out of that. Local farmers can produce and supply into that. And you also have manufacturing, where things like bearings, parts, tires can be manufactured out of Guinea and supplied into the sector. And many other things. The spin-off benefits that arise as a result of a massive project like Simandou. You're looking at either the manufacturing support where components and parts and consumables have got to be produced in Guinea to supply onto that project. The agricultural value chain that arises as people reorganize themselves to produce food to supply into that new community that has come up, and it's a massive community. We are looking at the communication systems that are required to power the rail network from mine to port, and we're looking at the people that would have to stay there. They would need to do roads, you need to do houses for those people, you need to feed them, so someone has got to grow food. And not just grow food for Guinea, because now if you are a farmer and you've been looking to export roses or horticultural products into Europe, you've got a cheaper transportation system by which to do so. So we are quite excited for Guinea as Ecobank. We are one of the biggest banks in Guinea, and we have taken a proactive approach in partnering with Simfe to make sure that we raise adequate financing to support the suppliers that are going to supply into that project.
It's just fascinating to see how rapidly that diversification of that economy is taking place. And it's almost like that kind of pent-up demand and that pent-up potential is now being released at incredible pace. I think one of the things that is so interesting about Ecobank's experience and having a footprint like you do across the continent in Francophone and Anglophone Africa, which very few people do, is just the diversity of experience. So at the one end, it's the really big projects that everyone talks about, like Simandou and Lobito, that you've been involved in. But then, and we referred to this in the intro as well, is just somewhere like Malawi and shedding some light on their economic trajectory and how they're leveraging their mineral wealth to develop the country. So interesting for us to explore that, like how Ecobank is working across those three territories, and just to contrast the experience and how you've adapted your approach to working across those three markets.
Oh yes, I'm quite excited about Malawi. So I'm quite fortunate in that as an industry specialist for the group. I cover 32 markets in Africa, and where there's an interesting mining opportunity, I'm there. So I'm quite happy and excited for Malawi, because for the longest time they were mainly reliant on exports of tobacco and mainly also non-governmental support to support the marginalized and the less privileged members of their economy. So it's nice to see employment creation coming out of these new discoveries. We were tracking that space quite well. There are 3 or 4 quite interesting projects in the rare earths minerals sector. We've been at the forefront of those conversations, because when these people come to Africa, a geological occurrence can throw itself or place itself where there are no people, where there is no infrastructure, and where you don't even know who to speak to or who to approach. So our role being present in sub-Saharan Africa, and almost every market in sub-Saharan Africa, has been to help people connect the dots. Firstly, we provide useful insights which get people to open their eyes and get alerted to the most important issues to consider or to make top of mind. We're also instrumental in putting the right people together. So if you're developing a project, we want to make sure we've taken you to the right place where your legislative or regulatory permits are secured and you are compliant in every respect in terms of the laws of the land where you're going to do business in. We also want to make sure that you are comfortable in terms of transactions. We are the biggest trader when it comes to domestic currencies. I don't think there's any other bank that trades in 32 different currencies in Africa. If you want to change the Sudanese pound, I can do it for you. If you want the Zambian kwacha, I can do it for you, which can be very difficult for people coming into the continent with international currencies, euro, pound, Australian dollar, and they're looking to convert into local currencies. So we've been there and we're ready to provide that kind of support. But beyond the transactional capabilities, I think what we've found to be most valuable for our customers are the insights that we provide, because I don't think anyone knows Africa the way we do, given the coverage that we have. I mean, we're in 32 African countries south of Sahara. So, yeah, we're quite involved. We have raised our hand and offered some financing solutions as well at project financing stage, though the projects are smaller relative to, what would get investment bankers excited. I mean, you can't compare probably a $50 million raise to a $1 billion raise for Rio Tinto, where we've also participated. But we have been quite adaptable in terms of being able to scale down and look at those small projects, but that are otherwise of crucial importance to that economy where we would be operating in.
And I think that granularity becomes really valuable when you understand export routes, when you understand the legal framework of a jurisdiction that's less well known, when you understand stakeholders and politics in that jurisdiction. So I think bringing that perspective to bear is valuable for miners, precisely because, as you said, they can be developing fairly remote areas. They can be a real focus for political issues and stakeholder issues. And I think the way those projects are financed and the way they're integrated into those economies, particular smaller economies, is fundamental to their success. So that longer-term de-risking of mining projects is so important from a financing perspective and an integration perspective. It becomes fundamental to how they develop. So that perspective is so valuable for those operators in those jurisdictions.
Yes, I find that we need to be nimble in our approach. You can't operate a one-size-fits-all type business model, because the markets that we operate in are quite fluid. And in this way, I see ourselves mirroring what the Chinese have done. We've got some of the big Chinese companies driving the economies in Africa, but they also quite agile. They don't just focus on the biggest. They have capacity to scale down and run some very small projects and make quick decisions that way to increase their stake in the minerals sector, and which I felt was quite strategic and smart for them to do that.
Not just to be exposed to the established jurisdictions, but to look at opportunities outside of that. And that's exactly, although it's not a Chinese project that you're involved in Malawi, but that's exactly where the overlap with your strategy comes from, is being present in those smaller
markets. We've seen that in the Congo mainly, and in Zimbabwe also, where they go in, they buy into these major mining houses, take big stakes or controlling stake or take over 100%, but you still find them pursuing some very near artisanal opportunities, bring in equipment, mechanize, do shipments very quickly into China, and decisions are made quicker and faster than is in the otherwise larger corporations which are government controlled. There is merit in that, I suppose, because we are in economies, if you take, for instance, so there is merit in being flexible that way, because we operate in economies that are unequal and quite varied in terms of the stratas of the economy. The levels of income are different. The levels of sophistication are different for the commercialized sector. And in some of these economies, they've got a quite dominant informal sector. So if one is to try and tap into that sector and disrupt and stir up some changes and get people to be encouraged to start to save and contribute to the formal sector, you've got to think about the kind of solutions or solutioning that you can provide into that sector. And what we found for the informal sector, for instance, is when we allow them to aggregate and get organized as suppliers or a community of suppliers into a main project, we then encourage them to bank, to accumulate savings on a promise to provide financing. And we have found, interestingly, that borrowing has been been the biggest stimulator for people to start contributing to domestic savings, because now they want a transaction trail which will enable them to access funding when required. And we found that even the mining houses themselves are quite excited about that, because it represents financial inclusion. It means all of a sudden communities that were not being banked can now access funding. We have communities that can come together and set up a horticultural project that supplies food into a mining company. And then what we do is to encourage them to open small accounts into which they can drop in a few savings. Over time, it allows that person to come maybe after 6 months or so to borrow some money, to buy some new tools for tillage and so forth. So it has been quite interesting in that when you're able to move up and down the scale to address the immediate and imminent needs of a localized community, but you've got the adaptability to go up and operate on a broader global scale, I think it's what Africa needs today.
It's perspective right across the value chain. And I suppose you can view it as enabling those two worlds, the corporate and the mega, and then meeting that with local suppliers and local solutions, which are at a completely different scale with a completely different funding requirement. So much of that is that middle ground and being able to mediate those two very diverse sets of needs. It's fascinating. Thank you for that insight, Isabela. One of the things we touched on earlier was infrastructure, and you mentioned the sensation of maybe getting ahead of ourselves in terms of critical minerals production and infrastructure having to catch up with that. I think the other key component in that conversation is carbon intensity and how we're producing a product that's going into environmentally friendly technologies, but we have to produce that product in an environmentally friendly fashion. So I think there's a lot of work going into technologies that will enable that, so talking about green metals, green processing, less carbon intensive modes of production, and I think that's going to become an increasingly urgent requirement as we start to see things like carbon border adjustment mechanisms. The EU and the UK already have deadlines on those particular CBAMs that have been defined. So I'm really interested in your views on green metals in general, how that particular aspect of green industrialization is unfolding across Africa, and how you see that developing in the next sort of 5 to 10 years when those CBAMs are really going to bite for exporting economies.
Yeah, and I think several media announcements have been made from these governments in Europe that the carbon pricing system is coming and it's going to be imminent. So we're seeing a lot of our customers taking stock of where they're taking their power from and looking to lower their carbon footprint as much as is possible, including governments themselves. The government of Zimbabwe, for instance, has recently concluded a raft of legislative measures to make sure that it's compliant with Article 6 provisions on carbon trading and accounting for carbon credits, which is quite good, because then it allows maybe players in the renewable energy sector to trade their carbon credits with a company in Europe, for instance, because then there is a standard for the codification and accounting of those credit units, which I think was quite a useful tool by the government of Zimbabwe. So we're seeing a lot of action in that space. We are also seeing an interest from DFIs opening up massive lines of credit to support whatever risk commercial banks can underwrite. I mean, we're in extensive discussions with European Investment Bank. We are also in discussions with NORAD. We're in discussions with the Impact Fund Denmark. They have expressed an interest to work with us across all markets. And we're actively looking to capacitate the generators of power, the generators of renewable energy, to set up projects to come to market sooner rather than later. And one of the interesting aspects to this is that before this, I think it was just incumbent on a mining company to reach a net zero carbon scoring by 2028 or whatever year they would have set themselves some targets for. But this imminent approach of carbon pricing is getting people to reconsider their approach to this. But what we are coming in to do is to find means and ways of making sure that we de-risk this for the mining sector. So it doesn't have to be incumbent on the miner to not only mine, to worry about, how difficult it can be to develop a mining operation, then to run it and get a product to market, but to then think about how to source power, or even how to set up a power station that you can run and supply power into an operation and do it at a reasonable cost. So you're not only worried about the source of power, you're worried about the cost of power, or perhaps even the mix thereof. So we actively engaged with power traders, regional power traders, to make sure that there is the right kind of supply into the sector. If the IPPs that are lagging behind, they're given the right kind of support. And we're quite excited about some of the partnerships that we've forged in the space with the likes of Africa Green Co, Petrodex. We're having some very interesting conversations around how we can solution for this. And I think there's a lot of hope. The big projects like the Inga Dam in DRC, I think 10 years from now will transform that region completely. So it's a welcome development that this demand for clean energies or cleaner transportation systems is also seeing Africa being moved or transitioned from a place where it was energy derived to a place where hopefully we will become energy sufficient.
It's the opportunity for Africa is huge in the realignment generally. So the way we position ourselves within those mega trends is so critical, and the need for acting as a continent, as a bloc, has never been more urgent. I think the cohesion that we act with as African economies is going to become fundamental to our success, not only in terms of trading with each other, but in terms of how we define our role within the transition and within this new trade world that we've entered. It's full of opportunity. We have to grab it now as a continent. I think that's the challenge for us in front of all African nations. We've spoken a lot about how a lot of our traditional export partners as a continent and export partners as a mining industry are changing their rules and their requirements, and how we'll need to adapt. At the same time, one of the key aspects of the boom that we're talking about today has been the attempts by African governments using various types of legislative measures to secure more value in country. So we've seen that happen with changes in Mali's mining code. We've seen huge changes in Ghana in the last few weeks. The DRC have made significant changes. I'm really keen to hear your thoughts on what the impact of those changes could be and how that might unspool over the next few years as we see this attempt to secure more value in country.
I am hopeful. That's what I can start off with saying, because I know change, when it happens the first time, it can be quite uncomfortable. We saw the same thing on beneficiation. You know that 10 years ago, the beneficiation mandate was even listed as one of the topical risks for the mining sector. And we've seen transitioned from that time to a place today where there's alignment between the sector and host governments around the compelling need for beneficiation and expanded value chains in the domestic economy. So I'm quite hopeful. When I see this raft of legislations that speak to local procurement, it can be uncomfortable initially because, we're talking about maybe a counterpart that is importing, adds a margin and pushes into the mine, and yet mining houses as price takers would want to see that they've got opportunity to push down costs as low as possible because they are price takers. And when the markets change, it can be quite hostile. They can take no prisoners. It can be very difficult to absorb some of the losses. So I do commiserate with that cause, and I appreciate it. But in the long term, there is merit in having domesticated supply, because when you're looking at one that is raising money in hard currency to develop a long-term project, and then they've got exposure again in ensuring that the procurement aspect, which is probably 60% of the revenue flows that will have to be attributed to procurement, is still again hard currency forecast. And what it means is when the markets change, you've got little flexibility to cut costs, and you're still exposed to inflation from a broad spectrum of jurisdictions. But where you've got domestic supply in a local currency, which is softer relative to the sources of capital that might have initially powered the project, and those currencies are stable, domestic inflation is contained, and you've got capacity to lobby the host governments for favorable policy provisions to make sure that you've got a friendly environment to operate in. I think it makes a lot of sense for there to be domesticated supply to the extent possible, provided there is no compromise on the quality of equipment that we end up using, or the consumables that go into the operations because of the risky nature of the operating environment. But over time, there's good cause for there to be domesticated supply. And I'm hopeful, because I've seen that these host governments, I've seen a lot of talented youngsters. I mean, education has been one of the biggest investments that the continent has made. I think 10 years ago, I was looking at some statistic that was saying China was receiving some, it actually said there's been a growth in students being exported into China for training by the continent. That number has grown from 4 or 5 years ago by 400-500%. That speaks to the number, the increase, the growth in students that are going offshore to train and get the right kind of skills which we need in the mining sector. So be they manufacturing skills to make sure that the right kind of tools and consumables are produced to supply. So I'm quite hopeful. So when the change happens, yes, it can be painful, but we stand ready to support, to make sure that whatever buffers that need to be created to make that transition comfortable, we're ready to support with a wide range of financing instruments and solutions.
And I'm sure we're going to be discussing those solutions in a few weeks' time. It feels like this year's Indaba is going to be one of the biggest ever. It feels like the whole world is convening this year. It's not just going to be about the industry. It's going to be about everything around the industry, about power, about infrastructure, about the realignment in geopolitics and trade, new friendships, new alliances. So it's an incredibly exciting time to be working in this industry and talking about this industry. And we look forward to seeing you and the team at Indaba in a few weeks' time, Isabela.
Equally excited, and thank you for having agreed to host me on this interview.
Thank you. We really appreciate your time and the fascinating conversation. Thank you.
Thank you for tuning into a Voices of Africa podcast this week. Voices of Africa is a forum where Africa's leading experts weigh in on cross-sectional topics affecting the continent. Experts share their views on how we can unlock greater value that will benefit industry, government, and communities. For more of our insights, visit our website or subscribe to our weekly newsletter, Views on Africa, in the description.